Hit it.
Friday, February 13th, 2026, episode 285. I'm Patrick Serezna.
And I'm Kevin Muir. This week, we are excited to have Spectra Markets' Brent Donnelly back on the show. We have a fascinating discussion about FX interventions, the dangers he sees in the stock market, and what his magazine cover indicator is telling him. And then I don't know about you folks, but in this topsy-turvy world, I feel a little like the legendary Bruce Dickinson, except instead of needing more cowbell, we need more talking charts.
Baby, we need more cowbell, baby. And folks, we might even drink some beers along the way. So, Kev, I'm drinking the Pilsen Chop. I'm out here in Paraguay. This is like their Paraguayan beer, and I'm going to give this a go. And let's see.
It is. You're on the same time zone as me, right?
No. I'm actually 2 hours ahead. So it's like 1 o'clock right now.
Okay, because I was going to say it looks like you already had a couple.
Shh. Let's not say anything else. All right, Kev, give us the disclaimers, buddy.
Nothing in this podcast should be viewed as investment advice. The listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include the tech leadership extinction event, the software valuation implosion, or the cloud growth reality shock.
I think we're just calling a market bottom on that space by saying those right there. But anyway, let's get Brent on.
It's our great pleasure. Welcome back to the show. Brent Donnelly, president of Spectra Markets, author of the AMFX and the Friday Speedrun, and also the terrific podcast, Macro Trading Floor with Macro Alf. I got that right?
Yeah, that's right. Yep.
Great to be with you. Great to be with you. Thanks for coming on the show, Brent. It was great for you to be back.
Well, we are with each other in a sort of virtual way, I guess.
That's right. And the other thing is that for those who are looking at us, we're both Canadian. We're both follically challenged. And I just want to assure people that there are people that aren't Scottish and Irish from Canada that look like us. We don't all look the same. I personally, I don't know about you, but I'm feeling like I'm going through my Farley Mowat stage.
Well, that's an obscure reference. You got to.
That's right. All the
Canadians. You got to stick with the Tragically Hip and more well-known references.
Okay, let's get right to it. We got a lot of fun things to talk about. Start with the yen. And for those who don't know, Brent is the old axe in terms of yen trading. I can't tell you how many people I've stumbled across over the years that start telling me about like, oh, Brent, he used to trade like just size. Now, what bank were you at again?
Oh, man. So what bank wasn't I at? I was, the main places I worked were RBC, Nomura, Lehman, and Citi.
Okay.
And then I worked at a hedge fund for a few years. And yeah, most of that time I was a market maker in yen. So the craziest time was Lehman because in those days, there was two things happening at the same time. So one was correlation trading was like super big at that time because there wasn't as many algorithms and people were just a lot dumber in that time. So you could make a lot of money just trading correlations if you knew what was correlated to what.
Right.
And in 2007 and 2008, the tightest correlation to dollar yen was Lehman Brothers stock. So I was working at Lehman Brothers as the dollar yen trader, like watching Lehman Brothers stock go to zero and like wondering how much dollar yen I should be short. And then what's the point? Because I'm not going to get paid if it goes down. So
that's great.
Reference here in Excel spreadsheet.
So one of the things I was thinking about was when you think back, we had this situation where there was some intervention, and I'm going to get you to speculate on what would happen, but before or what did happen in terms of the intervention or whether it even occurred or the checks or how it works. But First of all, did you ever trade against the Bank of Japan?
Yeah, a couple of times. In 2011, they intervened after the earthquake.
Yeah.
Then they intervened again. Actually, in 2003, they intervened buying dollars as well when I worked at RBC. So,
all right. So I want to know what that's like, because to me, that feels just wild. Like they phone you up and they just ask you for size and like they want to move it. So you show them way away and then you show them this price. And I guess you can do a certain amount. Just walk us through like kind of what those experiences were like.
Oh, man. So, I mean, I don't know how far into the weeds you want me to go because there's a couple of crazy ones. But in 1998 was actually the craziest one because they were selling dollar yen at that time. It was when long-term capital was going under, and long-term capital and Tiger and all the funds had these massive dollar yen positions because it was like free money carry trade. You were making 4% if it didn't move. And but the weird thing was just this. I'll try to make it short because I don't know if this is interesting.
No. People are gonna love it. Like
Okay,
this is great.
It's just so in the weeds.
Okay.
But the way at that time that FX worked was it was still mostly voice brokers.
Okay.
So in order to trade, you had to like pick up the phone and say, like, the guy would be 90.95, you say 100 yours or whatever.
Yeah.
But EBS had started, which is the electronic brokerage system.
Right.
And as kind of like I don't know if it was an experiment or what, but the Fed decided they were going to intervene on EBS, which is weird because like it could be 90 bid in the voice broker and they're selling at 60 on EBS.
Right.
But then the even more crazy thing was I worked at Merrill Lynch at that time, and the people in credit had not set up the Fed in EBS. Like every counterparty has to be set up in EBS. So like if I want to trade with, RepNat Chicago or whatever, they have to be set up in EBS, and they had never set them up. So dollar yen was basically trading like 100 points below the voice brokers, but we couldn't trade with the Fed because we didn't have credit with them. So we could see the offer, but we couldn't trade on it. So my boss was like losing his shit because it was basically like this. It was like an insane arbitrage, like where people were making like millions of dollars on it. But the funny thing is, so they actually don't usually come in size. So what happens is the phone will ring and it'll be like the trader at the Fed.
Okay.
And they'll just say like dollar yen in 10 and like say it's 60, 65. You don't show them a stupid price because it's the Fed. So, but you just start buying as much dollar yen as you can if they're, if it's at the lows and they're a buyer.
Right.
So essentially the second the phone rings, you're just buying dollar yen.
Okay.
And then, you make whatever price to them, it's irrelevant.
Yeah.
But then a lot of times they're actually dealing on the machines and dealing in the banks at the same time.
Okay.
But essentially, like, if you're the first call, you have like one of your best days of your career. And if you're one of the last calls, it's already up 250 points. And then you're like, oh, the Bank of Japan, or it's the Fed usually. The Fed's calling, I'm going to buy dollar yen. And then you pay the tippy top and get absolutely wrecked. So that happened to me in New Zealand dollar. Actually, one time when I worked at Lehman, I was trading Kiwi, what it's called. And Friday at like 3:30 p.m., Kiwi had dropped like 200 points. And it was like Kiwi was going crazy at that time because it yielded 10% or something. And the phone rings, just like my personal line. And it's like, hey, mate, it's like so-and-so from the Reserve Bank in New Zealand. What's your bid? And it was like 100 Kiwi. And it took me about 5 minutes because I thought that it was like a prank or something. And then he's like, no, mate, I need your bid. Because he had my number from like my email signature or something.
Right.
So, but it had already dropped 200 points. They had already called like 5 other banks. So I sold like 300 million Kiwi for his 100. And then, but I was the last person selling, and now it's like 4:30 on Friday, and I'm like short 200 million Kiwi going into the weekend. And I actually called him back and said, like, I can do another 200. And he's like, no, we're good, mate. So I think that was actually my worst day at Lehman Brothers. So usually when they come in though, it's just a lot of chaos. And then now there's different ways, like the Swiss National Bank, obviously they just left a bid for Infinity at 120 in Euro Swiss for a while. So sometimes they'll do it on the machines and stuff.
Right.
But this time there was no actual intervention. So like the two things they can do is they can do what's called, I know you know this, but for some people that don't, they can do what's called a rate check, which is essentially they call up and say like, what's your rate in $100 yen? And you show them, but they pass and they don't trade. But it's like a strong signal of, hey, we don't like where the market is right now. So we're sending a message to the banks. And then they usually tell the banks, like, go tell all your clients that we called.
Right.
And that's what happened on whatever date that was, Friday, I don't know, like I guess probably January 31st, if I'm not mistaken.
Yeah.
And it was the Fed that called, but the only reason it's the Fed is that, the Bank of Japan doesn't have phone lines to every single US bank necessarily in New York. So they call the Treasury or the Fed and say, like, can you guys do a rate check for us on our behalf? And then the Fed desk calls the banks. And then obviously everyone's like, oh, shoot, okay, I guess they're going to intervene. But then they never intervened. So dollar yen went down a lot that day, and then it went all the way back up. But in the end, people love to like say, oh, the market's bigger than the central banks, but like they have a lot of ammunition. So like, yes, in the long run, if everything stays the same, they can't hold it forever, but they can hold it for a long time. So like
Right.
they sold in 2022, they sold in 2024, and they sold this year, and all at the same level around 158, 160, and it never went back above. Like I have, I think, more respect than a lot of people for the central bank's ability to hold it, because all they're trying to do is like they're not trying to make dollar yen go down to 100. They're just trying to make it stop going up. And generally, they, I think, are pretty effective. And the record shows the Swiss National Bank is like the massive exception to that, because they've, that's been a complete clown show. Like
Yeah.
they've,
Well, the Bank of England wasn't very good either.
no, that's true. So it sort of depends on the situation. Like those were kind of unusual situations in that they were trying to defend pegs,
Right.
and markets will just come for your peg because you're holding a market out of equilibrium and essentially like showing a bid above where equilibrium is. So the market just comes for that, like Soros came for it, or whoever came for the Swiss peg. But when you're just selling into a rally, but you're not guaranteeing any level, you can do that 5, 6 times and hold it for a year.
Right.
You just, as the Swiss National Bank showed, you can't hold it forever. But what they're hoping to do is like hold it and then do some policy changes that will then help with, maybe asking the BOJ to hike a bit more, or using reserves to, do asset switches. And then the other thing that I think has happened is that in Japan specifically, they have a lot of control of everything, right? So they can get the two big pension funds, which is Campo and GPIF, have massive overseas holdings. So
Right.
they can call Campo, which is like Japan Post, which is kind of like the national pension system, basically. They can say like, oh, hey, we need your help. Can you sell 3 yards, like sell $3 billion yen after non-farm payrolls, which I'm pretty sure that's what happened in this case. So they
Okay.
have a lot of tools to kind of like send the
So
message first and then start reinforcing the message.
okay. So let's start with, there was some speculation that this was actually Besant and it wasn't the Japanese. You just put those aside. This was definitely the Japanese wanting to stop the yen from falling.
I mean, I don't have like inside information, but Gigi, which is pretty reliable, like in Japan,
Yeah.
said that it was on behalf of the B, or on behalf of the MOF.
Okay.
So
So we're going to put that aside. We're going to assume that it was the Japanese government that wanted it to stop going down. Maybe.
yeah, so Besant, like, so there's two aspects to the U.S. policy. Is one is people think they want a weak dollar, but they kind of don't. They just don't want people to have super, super competitive currencies. So like they want a stronger yen, a stronger Korean won, they want a stronger Chinese
Right.
yuan, but they don't really want like a weak dollar, because that opens up Pandora's box, like 1987 style. So he talks about like we want the won and the yen to be stronger, but that's about it.
Okay, so let's just assume that we'll take that at face value that it was Japan wanted it up, and then let's why don't we just take a moment to explain what you mean when you're talking about the different ways that they can influence that price, and one of them is you're saying that they're asking pension funds that they somewhat control to actually change their asset mix and just kind of just go through how that would work, like they own U.S. bonds and how that would work.
Sure. So GPIF, for example, I can't remember. I could Google it, but I can't remember the exact amount that of assets they have. But it's an absurd number.
Yeah,
Like
it's the largest pension fund in the
yeah,
world by like
yeah.
a factor of two.
I think it might be a trillion or something.
Yeah, it's a
So
monster number.
when Abenomics happened, they wanted a weaker yen because it was creating all this deflation and all that. Like dollar yen was at 80 or something like that. So part of that reform was to get GPIF to go, instead of like having all your money in Japan, send 25% of it abroad, and do it unhedged. So they would basically buy euros or buy Canadian dollars or whatever, and then buy European assets and buy Canadian assets, whether it's
Right.
bonds or equities. And so when they announced certain phases of Abenomics, then literally like one of them, I think it was Halloween 2016 or 2014, I can't remember, but one of them literally like the Abenomics announcement came of like, here's some stuff about the three arrows.
Yeah.
And then 2 hours later, GPIF announced they're going to increase their foreign investment percentages or whatever.
Right.
And like dollar yen went up 600 points that day or something. So now they've done that. Like Abenomics on a lot of levels succeeded in what they were trying to do. You know, they brought the animal spirits back, they got inflation back to kind of normal and all that. And dollar yen went from 80 to 160, which is
worked too
pretty
well.
fucking insane for a currency. You know, dollar CAD doesn't do that. So now the issue is like, it can become too much of a good thing, especially politically. Like as a Japanese person, things start feeling expensive. You know, price of rice has gone up a lot. You know, imports get really expensive when your currency's cut in half. So the politics have now flipped, and they don't necessarily, like I said, want the yen massively stronger, but it's weak now, and they want to stabilize it. And then the other problem that they were having is there was kind of like this negative feedback loop between the yen and JGBs, where people were just like, okay, this policy is crazy. Bank of Japan is super loose. They're going to have like runaway inflation and currency collapse. Like there was a point, I remember when they intervened in 2022, I made like this little, like, I don't know, sometimes I make these things. It's like making, when you're a kid, when you make a scrapbook and you say like cut out stuff and put it in the thing of like screenshots of like dollar yen's going to 200, Asian currency crisis, like all the, you know, Japan's the next Zimbabwe or whatever. And it was all in like a 2-week period in April 2022. And then they intervened and that was it. And it was over. So, but the problem is if your currency and bond markets start becoming too correlated and there's a reflexivity, and then you have a problem. So they're trying to stabilize it. So they have like, on their side, they have trillions of dollars of foreign assets that they own, which they can sell. Right. They have the Bank of Japan, which they control because it's not an independent central bank. So they can get them to hike. They can use like moral suasion. They have the US on their side as well. So they're not pissing in the wind against the US. So they have a lot of things on their side.
Why do you think it's staying here though? Like, why isn't the yen higher? Like, what do you think? How do you think this plays out?
It just takes time. Like, I think sometimes people like want things to happen instantaneously in currency markets. And the reality is like, things just don't move that fast in FX generally. Like you can take huge positions because vol just generally isn't that high. And there are things, you know, things going the other way. Like the biggest thing coming the other way is that, first of all, if oil's going up, the importers in Japan still have to buy dollar yen. In order to buy their oil, they need to buy dollars.
Right.
And then US corporates are still earning a lot of money. So like Apple still sells a lot of products in Japan. They get yen from customers and they don't want yen, so then they buy dollars. So there are like offsetting flows that are going to be buying dollar yen, and they don't really, those kind of flows aren't taking a view on monetary policy or whatever. They're just like, okay, we got to buy dollars on the 30th of the month, so go buy your $4 billion or whatever. So I would say like a lot of the time in FX, there's natural flows in both directions. Like it's not like a lot of times in equities or something like that, you can have a situation where it's just like almost everyone's a buyer and it's impossible. Like there's just nobody selling some micro cap that's, you know, 30% short or whatever. But in FX, there's almost always people on the other side. And then the other thing too is there's natural rebalancers. So like if you're China and you have, just to keep the math simple, like say you have €1 billion in your reserves and then euro goes up 10%, then if you wanted to be 10% euros, now you're 11% euros, so you sell. So they tend to rebalance a lot because it's so liquid. So whenever something moves like 2 or 3%, a lot of central banks are on the other side rebalancing. So I think it'll just take a while. If you look at what like the craziest moves have been in cross yen, so because stuff like euro dollar has gone up, but dollar yen has gone up. So euro yen has like absolutely gone crazy.
Right. Yeah.
So
okay,
like,
before we go in that, actually, I just want to, let's just stick, because I do want to ask you about, one of my subscribers asked me, he said, make sure you talk about Swiss yen, because that's going straight up. And I wanted to get your opinion on that. But before we get to the crosses, What about the idea that part of the reason for the yen's weakness is Japanese retail chasing the US AI bubble?
Yeah, I mean, that's been a big component. Same with Korea. Like a lot of
Yeah,
Korean money is coming into the US, and then that's weakening the won there as well. I mean, I would guess that some of that is coming to an end, just given
okay.
relative performance of Nikkei to Mag 7 and things like that. But yeah, that's been a lot of the flow. And same thing with like SoftBank investing in the US.
Yep.
People in the US, or VCs or OpenAI or whoever they're investing in, don't want yen. So obviously, then if SoftBank has some of their funding in yen, they got to buy dollar yen. So like anything that's US exceptionalism tends to create a lot of flows into dollar yen for various reasons. So that's been, but I think that's like a big reason it did go up, but it's not really a reason it should keep going up because I
Okay,
don't
fair
think
enough.
the
But then
growth rate
isn't
there.
that makes our thinking about like why don't you own yen here? If that's coming to an end, there's going to be a change of flows. And then talk a little bit about this new prime minister in terms of what she believes, and isn't one of her kind of ideas is kind of like a make Japan great again, and doesn't that require fiscal, and if so, wouldn't that mean that there's going to need to be money coming back, like, because wouldn't a natural way for her to pay for those things is to say to the GPIF, listen, you have 25% in US bonds, bring 5%, 10% back so we can do it here in Japan.
Yeah, I think that might be a theme globally too, is that all this money has flowed into the US, like all the way from like Swiss National Bank to GPIF to, Danish pension funds. And for a bunch of reasons, like some political and some economic, I think a lot of countries are like, why are we putting so much money in the US when, our own industries could use some of that money as well? I mean, the question is, are there enough investable projects in Japan or Denmark or whatever for all the money that's out there? But I think that that is part of the thinking. So yeah, the thing with fiscal is that if it can go both ways, because like you saw in the US, like if people think it's out of control and there's going to be a bond vigilante attack and the wheels are going to come off, it's bad for the currency.
Right.
But if people think that it's somehow manageable through they can thread the needle, then it's good for the currency because it boosts growth and it and tends to make the central bank more hawkish. So it's really hard to trade fiscal versus FX because the story can be so on a like a razor's
Knife's edge.
edge.
Yeah.
Yeah,
Um, so you mentioned Korea, and they fascinated me a little bit as well because they're obviously struggling with money flowing out of Korea into the U.S. stock market. So much so, did you notice that on December 24th that tax law that they snuck through?
yeah. I think there's kind of like a whole issue there of like Robin Hood on crack kind of
Yeah.
thing. And so they're also making like people take a course if they want to day trade and stuff like that. So yeah, but it doesn't seem to be having that much of an effect. But yeah, it does that definitely is another thing. But then again, like I said before, a lot of that stuff to me peaked in like October of 2025, like the unprofitable shitcos and crypto and everything that retail loves the most. It all peaked on basically like October 30th of 2025.
Well, I know that's what a lot of people don't realize. The Nasdaq hasn't made a new high since that date. And
Yeah,
since
yeah.
that date, actually, Nasdaq's gone sideways, but like the software index is down 30-40%.
And if you look at unprofitable tech, look at quantum computing, crypto, all this sort of like the junkiest stuff that retail likes the best is down like crazy amounts. Yeah.
Okay. So
So to me, I think
we
that,
will get to stocks because people will get mad at me if I talk. But let's just finish up with currencies.
yep.
So you were about to talk about the cross rates. Do you think that there's more opportunities in like the like owning euro yen, or sorry, selling euro yen or selling Swiss yen? Are those better trades in your mind?
So it depends on the time horizon. Like right now, I feel like the dollar down trade is tired. Like it's people got really excited about it when the Greenland thing happened, and then Trump was saying weak dollar's okay, and we kind of had like a blow off bottom in the dollar. So
Okay.
right now, I'm more neutral on the dollar. So that's why I like crosses because then you don't have like a outright dollar exposure. And if you look at some of the things, like one thing I look at is just the Sharpe ratio of being long, whatever the thing is.
Okay.
Um, and the Sharpe of like Euro Yen over the last year is 2.5, which is really, really high. Like very few things in all asset classes across all of macro have that high of a Sharpe.
Okay.
And generally, it's like the up the escalator, down the elevator kind of thing. A lot of times, where
Right.
high Sharps attract more money. The more money comes in, the better the Sharpe gets because it keeps on going.
Yeah.
But then when it turns, a lot of times you get like a more of a discombobulated reversal. um,
Right.
just making up terms here as I go. So that's why I like Euro Yen a little bit better. It's a way to be long yen, but you're neutral on the dollar. So it just, if you're bearish dollar, then just be short dollar yen. But to me, I'm more neutral on the dollar. So yeah, Euro yen, Swiss yen. Swiss is a weird one though. That's like, it's basically been a widowmaker for 3 years, 4 years, 5 years. Is that the rates are super low there. There's no inflation. So it appears to be the best funding trade, like the best short currency trade you could ever have.
Yeah.
But they have a massive current account surplus and money just keeps on flowing in. And they don't really give a rat's ass anymore about what Swiss does. Like they gave up about 20 victories ago. So you just have this natural flow that's relentless, that's buying Swiss. And then there's also kind of like a loose connection between gold and Swiss. Like Swiss is the closest thing in FX that you can get to gold. So
Okay.
generally, if gold's ripping, being short Swiss is just not a good trade. So I don't really like the Swiss yen side, although Euro yen and Swiss yen are not that different but yeah,
Okay.
I just stick with Euro yen.
One of the things that I've been kind of pounding on the table incorrectly is that vol in FX is going to go up. Trade wars are going to eventually turn into currency wars. Am I a fool for thinking that?
I mean, it has gone up a little bit from
Yeah.
like ridiculously low levels. um, I feel like vol is kind of cyclical, but it's weird. It's like, the Minsky moment thing. Like it sounds so smart when you're young, and then you realize like, okay, well, tell me when when is the stability going to breed the instability? Like,
Yeah.
sure, it's basically a truism. You go from stability to instability and back and forth. But like, unless you can figure out when that's going to happen, that it's just like a pointless truism. And FX vol is kind of like that. Like it's cyclical, but timing the turns can be difficult. So what I tend to do is like kind of more pick my spots. Like if I have a reason that I think something's going to accelerate, I will like buy vol or buy gamma.
Yeah.
But as a rule, it's very difficult to predict because most of the really big moves in FX vol come from shocks that can't be forecast. So I generally don't like, as an asset to owning FX vol is pretty shitty generally.
Yeah, for sure.
Owning like gamma with good timing can be good.
I just thought that eventually the Trump kind of I want to lower US dollar, and I know he's probably getting talked out of it by Besson because they're worried about it accelerating if they start to get what they want, and then that causes stocks to go down.
Yeah.
But I kind of thought Trump's going to win over and start saying some crazy stuff, but he's actually being quite disciplined in terms of the currency. Like if you think about it, this is the first time he said anything about the currency in since he took power.
Yeah, and he'd mentioned it a couple of times in like 2017 as well, and people tried to jump on board. I think they just have so many balls in the air, and like you said, a weaker dollar is not a free lunch. Like there's a lot of risks around it.
Yeah.
So I think if you rank all your priorities and then you say like, okay, how risky are they? A weaker dollar is like priority 14 and it's kind of risky. So I don't think it's like a big policy feature of this administration. Like, yeah, sure, if euro went to 125, they'd probably be happy, but they're not sitting there like planning how to get it there.
Okay, well there we go. So my long FX vol trade is terrible according to Brent.
And I sell FX options for a living. So what are we doing here?
Let's talk a little bit about stocks because people are probably fed up of the currency stuff, even though I love chatting about and hearing your stories. You mentioned that stocks are no longer behaving as well, especially the real speculative stuff. Do you worry about some of this being kind of the pause and the rotation before the big drop? or do you think that this is just a natural, healthy rotation in a continuation of a bull cycle?
So, okay, there's a few thoughts that I have, but some of them are contradictory in terms of direction. So, the one thing that's bullish, I'll start with that because I have more bearish things, but one thing that's bullish for the next 4 weeks or so is the way that the big beautiful bill worked was the IRS didn't change withholding in 2025,
Right.
but the tax changes did apply. So people are going to get crazy tax refunds in 2026, and that basically starts February 15th. They
Okay.
can't send them out until February 15th because of some law. I forgot what it is, scam prevention law or something.
Okay.
So, and generally there is kind of like a seasonality to stocks that benefits from tax refunds in March kind of area.
And this will
And
be an
there's-
especially large. This will be an especially large refund because of the
right.
one beautiful
Yeah.
bill. Yeah.
Yeah. I can't remember the number, but I think it's like 50 billion or 60 billion extra is what people are going to get. But so normally that should be like bullish shitcos and crypto and whatever
Yeah.
crappy stuff that people will buy when the money drops on Robinhood or whatever. But the one thing though now is that I don't know if people are actually, if there's enough animal spirits that if you're like the person that's been trading crypto for the past 5 years and made some money and lost some money and whatever in your account, and then you get $3,800 in your tax refund. I don't know if the first thing you're going to do right now is go and buy crypto or go and buy like Rigetti computing or whatever. I'm wondering if the spirits are kind of have been dampened, especially by like the sort of like true believer stuff like Saylor and Tom Lee and all that has all been destroyed so much that I kind of feel like maybe people are going to be like, you know what, fool me once, shame on me, fool me twice, I'm the dummy or whatever.
Right.
But anyways,
Almost like when, they give cash back in Japan way back when they had too much debt and people just paid down debt instead of spending it.
right. So that's the question is like this $60 billion is going to show up and what are people going to do with it? And I guess I'm leaning more towards the fact that they'll save it or pay down debt.
Okay.
But I'm also a little bit nervous to be overly short after like we have dropped a lot and this money's coming. So the next 4 weeks I think will be really important for my view going forward in terms of like how things trade. But overall, like if you just forget about fundamentals completely, the charts look so bad. Like even the S&P chart doesn't look very good. Like we had a sort of a pretty steady rate of appreciation for a long time, and now it's kind of flatline, peaked head and shoulders at a round number 7,000, and like a lot of blowups are happening under the surface. So like dispersion is crazy. Like every single day something's dropping 10, 15, 20%. There was a chart. I'd like to give the person credit, but I don't remember.
Yeah, I think it's the compound. You're talking about the number of stocks, like 115 stocks have traded above 10% or something.
Yeah,
And
yeah, 7% or more.
It's the compound guys. Yeah.
Whatever period. Yeah. I thought that was interesting. And then the guy at Miguel at Nomura does a lot of work on dispersion.
Charlie. Yeah.
Dispersion, predicting blowups and stuff like that. And all that stuff, like on all the under the hood stuff, all kind of screams like no bueno.
Yeah.
But
well, you know what? And I talked to some like pod shop guys, and the pain in the long short community is huge. And the factor vol is just out of this world. It's ugly out there. People don't appreciate how bad it is from that perspective.
Right. Like you look at a chart of like IGV and XLE, like it's not the K-shaped economy. It's like the alligator jaws that are just like this. And so all that stuff kind of makes me more bearish. The funny thing too is that there's a pattern that plays out so often. Basically, okay, you start around December 10th and you say, what are all the favorite trades for the next year? And they all start rallying because new money comes in. And then in January, they all rip because all the leverage comes in and everyone who's trading puts on those positions. And then usually around the end of January, people start getting nervous and it loses momentum. And then stuff starts to shit the bed in February. And that's kind of what we've seen so far. So like now most of the popular trades are getting taken to the woodshed one by one. And it's interesting, like even stuff like Nvidia is not rallying, even though like the picks and shovels story is stronger than ever, with like all these capex numbers being way above. I can, like, it's very easy to explain why like Microsoft's selling off or Salesforce is selling off, but Nvidia is selling off when everyone raised their capex by like 30% to 2% of US GDP.
Yeah.
Doesn't seem very good. So there's a lot of stuff like that that all adds up to me to say like the structure doesn't look very good. But the funny thing is, like, if you just look at the fundamentals, payrolls growth is above break even, unemployment rate's low, claims are low, inflation's
Yeah.
falling. You have like a captured Fed that is not allowed to hike rates. So like, what's not to love? But all that stuff was kind of known in December and January when everyone put these trades on. And now everyone's sitting there going like, okay, now what am I supposed to do with I'm long silver at 100, I'm long Nvidia at whatever, at 200. I'm long,
Yeah.
all the trades basically
And
are
eventually
underwater.
we run out of buyers. Like, this is my
Right,
point. Like,
right.
everyone tells me all of these good news, and I go, yeah, okay, I get it. Trump's not going to let the economy go down, or not going to let markets go down. Warsh is going to, cut rates. I get it. But everyone else knows those things. You're not trading, what's going to happen. You're trading what everyone expects to happen, and it's fully priced in. And
Right, that's the thing. And like, even on that, like, is Warsh really going to get the committee to cut into this economy? Like,
yeah.
I don't know. I don't really buy that anyways.
Well, even
But
the point
yeah.
that he says, like, Trump's not going to let the market go down. I go, do you think Reagan wanted 87? Do you think that Bush wanted 08? Like, I'm
Well,
like, since when do we think that the governments can control markets?
Well, you know what, the two worst years of the past, like, other than '08, of the past 20 years, were 18 and 22, were the two worst years recently. Like in 2018 and 2022, basically every single asset went down. Those are the last two midterm years. So there's absolutely no argument about the midterms. Like, they don't just come in and go like, okay, we're going to buy S&P futures.
Right.
So yeah, I definitely don't buy that argument. So yeah, I think we came from a place of like price for perfection. Obviously now we're not. So I guess overall I'm bearish, but I'm nervous about the next couple of weeks. I want to see how like the retail favorites trade. And then one other thing just on top of all of this is the thing with the karaoke company, causing 7% sell-offs in trucking firms. That's
What?
kind
Whoa,
of
I don't
like,
know this. I wasn't paying attention. I was on the road traveling. What happened?
okay, so this company that used to be like a karaoke machine company
Okay.
pivoted to freight logistics in 2024. And yesterday they announced some AI thing that they're using is going to increase freight throughput by 200% or something like that.
Yeah.
And so all the freight logistics companies sold off like 7%, but then it cascaded into like these other logistics companies and stuff. And it reminds me so much of in 2017, and these two things were like literally the tippy top of Bitcoin blockchain mania. Was when, do you remember when Long Island Iced Tea pivoted to blockchain?
Yes, I
And then
do.
Kodak, like 2 weeks later, Kodak, and like that, those were like December 20th, 2017, and
Yeah.
January 10th, 2018, which was like, and the top was like New Year's 2018.
Right.
So it, that you could argue is like a sign of, okay, this AI freak out is getting a little bit stupid.
Yeah.
But what that means to me is like, for my trading, is you can try to find, like, go dumpster diving on things where it just like literally makes no sense, but then you can still be short other stuff against it. So
Right.
like an example, and this is not investment advice, and this isn't even like my area of expertise, but I think it's a useful example for people to think about how to think about these things when you get like the baby thrown out with the bathwater kind of situation, are some of the best opportunities in markets, because like people are just freaking out, and like you said, long short pods are just selling everything that
Yep.
is in that factor, but that factor might benefit from AI, not
I
to
know.
hurt from AI.
And it doesn't matter because it's positioning. That's what everyone's trying to make you, like, come up with reasons for this. And I go,
Right.
stop making reasons for it. The reality is somebody's overweight and he's getting the tap on the shoulder, and that's all it is.
Yeah.
You mentioned crypto,
Yep.
and I'm bringing it up because you have a new piece, or you've written about it recently, and you have some new views on that. Well, do you want to share them with us?
Yeah, so I guess like I'll try to keep it short. It's like an 8-minute read if people want to go read it. But the long story short is that I think people tend to occupy this one side of the spectrum or the other, which is like crypto's going to zero because it's a scam, or Bitcoin's going to a million because it's like the only safe money in the world or whatever. And I just feel like, or also people like the other bull case is like Web3 will become a consumer product and all that. And I think the experiment has been running long enough, right? Like the Genesis block was mined in 2009. Crypto stuff really started like 2017, 2018, the blockchain started. And, there's been a lot of use cases tried, GameFi, NFTs, whatever. And I think it's fair to say at this point that crypto is a real thing. This is my opinion, that
Sure.
crypto is a real thing, but it's mostly a financial use case and then some other selective niche use cases. And at this point, like Bitcoin's not digital gold, it's not really a risky asset. It's not money, definitely. Like it's not a useful means of transacting goods and services. So I think essentially what we can say is that it's like this narrative sponge that picks up narratives and creates a lotto ticket mentality. And then people see the lotto ticket and, the stories are decent. But I think going forward, it's going to be harder to convince people that the next narrative is for real just because it's tried on so many different narratives and none of them have worked, that I
Okay.
think the amount of skepticism going forward is going to be higher than it was in the past. And to me, that just means like I would guess that we probably go nowhere in crypto for like 2 years and it just consolidates. If you look at like the OG crypto people are like 45, 50 years old. And nobody in my son's 21, nobody in his cohort takes crypto seriously. Like I think Saylor and Tom Lee and those guys have kind of ruined it a little bit. So I feel like we're just going to go into this kind of like crypto is kind of cool, like 3D printing is cool or VR or whatever. And it's like a niche, like a big industry, like it's a $3 trillion market cap if you believe the market caps. But I don't like I feel like we've reached like a maturation phase here where it's like it is what it's going to be. What you see is what you get.
Okay. One of the things that you mentioned earlier is you talked about the dangers of the yen going down while we were having a sell-off in the JGBs. And I agree with you. That is, I think, one of the reasons that they intervened. They didn't want that. And the last thing, I think even the Americans didn't want that. They didn't want the JGB spinning out of control and dragging rates up in the US.
Right.
One of the things that I think has been interesting from a macro perspective that we haven't seen in many, many years is that you go back to Liberation Day, we actually had a situation where all three assets, in terms of US assets, were moving together. We had the US dollar, US stocks, and US bonds moving together. It's been a long time since that's happened. Do you worry that that's a sign of something big that's changed? And what do you have any comments about whether you think that will continue?
So yeah, that's like the bond vigilante. That's like the doom loop trade that is have been afraid of in the US for a long time. And it was kind of happening, right? Like you said, it happened for a good 3-4 weeks. And it also happened in the UK in 2022.
Yeah, the Liz Truss moment.
Yeah. But I think the hard part about believing in that trade is that in the end, the government has a lot of tools to come back at that trade. Like in the UK, they just started buying bonds and everyone gave up pretty quickly because they're not going to fight the central bank buying bonds. And so it's kind of like the doom loop scary thing that could potentially happen. But okay, say that starts to happen in the US, like for real in a really scary way. The Fed will just be there. They'll cap yields at 4.5% or whatever. And
But doesn't that send the dollar lower?
well, then the currency will go down for sure.
Yeah.
Yeah. So, but the whole doom loop thing, it tends to be like an episodic thing that comes and goes, but I don't know. I'm not a huge believer in it.
Okay.
Just simply because like, I guess maybe because I feel like I've been hearing about it my whole life, but
Yeah.
there's the whole thing of like, it's non-linear. How'd you go bankrupt slowly, then suddenly, whatever.
Yeah, but
I get that. But
I'm with you that it's not going to cause the end of the world. And like I always laugh about the doom at 11, the guys that are trying to make, a living just scaring everyone. But I do think it's interesting that relationship, that correlation has changed. I wonder if the markets are trying to tell us something.
Well, yeah, that definitely it was a huge eye opener, but it only lasted for like 3 weeks. And then, so actually in Japan, it lasted for a long time, but it was weirdly kind of gradual. Like the bond market and the currency were selling off for a long time, but then equities were rallying. So everyone's like, I
Yeah.
guess it's okay. But yeah, when you get all three selling off at the same time, it's definitely scary. But that's why there's usually a response. I mean, that's where the tacos were first served was 3 days after that, they started changing the policy. So that's the thing is that like, if you're betting on that, you're betting on the government not doing anything. And that's just like hasn't been a
No,
good.
I'm with you. I just wonder if the markets force the government to do something. I
Yeah,
just
I think
wonder if
that's what happens.
that's how we get to a lower US dollar.
Right. I mean, that's usually how it happens, right? I mean, even in the UK, they changed their fiscal policy because the market was shitting the bed. So it will trigger very fast changes. But there's still, I don't know, there's still a world where like they just lose control, and then, like you said, then they have to cap yields, and then the dollar drops 35% or whatever. I mean,
Right.
that's always kind of on the bingo card, but I don't know. I'm not holding my breath for it, but it's
Okay, so
always
we're getting towards the end here. What
okay.
question should I have asked you that I didn't ask you? Like what's on your mind? What's important that I've missed?
Oh God. The only other thing, like I guess that we didn't really talk about is, and it kind of relates to my Sharpe ratio thing, is I've noticed a pattern over the years whenever I want to suggest a trade idea, and I'm like, people are gonna hate this, like it's just sounds so stupid. Those are usually good trade ideas
Oh,
because like that tells you something, that feeling that you get in your gut.
I always say when I'm scared to hit publish because I'm scared of what people are going to think about me, those are the best trades. And even though it's still scary to hit publish, but I'm with you.
Yeah,
If everyone agreed with you, it wouldn't be a good trade because everyone's
right.
already in it.
So the thing that's like that right now is emerging markets FX. Like
Okay.
stuff like Mexico and Brazil has been just going straight up. It's been a free lunch because you've been getting currency appreciation and like 10% yields in Brazil or whatever,
Okay.
depends on what you're doing. So I do feel like we may be getting close to a point where it's just become this free lunch that everyone just assumes like low vol, high carry, free money, keep piling in, keep piling in. And it just in the long run, EM doesn't work like that. Like there's a free lunch, but you eventually got to get off. And I was going to mix two analogies there, but eventually you got to get off the bus. um, and I have a feeling, partly because I feel like some other dominoes are falling already with like, mega tech not looking good and software and all that kind of stuff, that like I would be nervous. I wouldn't necessarily be short EM currencies, but if I was like long a massive basket of EM currencies, I would be nervous.
Got it. In terms of trading, what do you think is one of like the time held truths that you think people mistake or are most likely to get wrong or overlook?
I would say it's such a simple thing, but it's shocking how often people don't calibrate for it. Is just don't blow up. Like the risk of ruin like the managing risk of ruin should override everything else.
Yeah.
But yet people still like sell calls in SOFR and blow up, or like nat gas. Somebody just got let go for nat gas or
Yeah.
whatever. Like if you're running a strategy, and like obviously it happens a lot in retail. I get a lot of emails from people like, I blew up
Right.
my account again.
Yeah.
Like fundamentally, however you're trading, whatever you're doing, you should be structuring it in a like, it's like an ergodicity problem basically. Like if you run this simulate, like if you run your trading strategy a million times, you should be able to understand like it's not going to blow up.
Right.
And so I feel like professional and retail, it just, people still just blow up way too much, and mostly doing things that ex ante you could have told, that you could have predicted.
Yeah.
There's a 4% chance that you're going to blow up doing that, but people just do it anyway.
I keep saying because it's been so easy for so long and a lot of people are long stocks. It's, they like to be long and the market keeps going up. And I keep saying trade smaller. There's a lot more risks out there. Be careful. When vol increases, you need to change your trading. And often
Right.
I find people don't do that. Like,
Yeah, absolutely.
yeah.
Yeah,
Okay.
that
We're
was
going to,
actually a huge lesson in '08 because like literally if you vol adjusted, at one point in 2007, you'd be trading like $50 million max.
Yeah.
And then in 08, it would be like 2 million would be the
I
same.
know it's a huge number. It's
Yeah.
big. Like I know, I feel it. I go, well, what's the point of even trading that size? I say to myself sometimes.
Right. You feel like a loser. Yeah.
But the loser is the person that keeps trading that size and then, gets stopped out by the inevitable vol moves that are occurring just within the market. Like even today in SPOOs, like this morning, it was all over the map. Like you could, it was moving 1% like that, in a blink of an eye. And 1% is a lot. Like we used to spend all day working for 1%, and it was up and down 1% by like 10 o'clock.
Yeah, and actually, that's kind of like a corollary to what I was saying. Is correctly vol adjusting your position size is not really that hard to do, like with an Excel spreadsheet. But a lot of even professional traders, a lot of people don't do it very well. Yeah.
Okay, so I'm going to pop this to the last question on you. I did not warn you, but I know you're going to be able to do this. So there's this thing called Desert Island on BBC where they ask celebrities their top 10 bands and songs or whatever. I'm not going to do that to you. We're going to do Desert Island Trader Edition. And Desert Island Trader Edition, you got to give me your 3 bands. If you were stuck on an island, a desert island, 3 bands that you'd want. You could tell me songs or albums, whatever you want. 3 that you'd take with you. And then you're allowed to bring 1 trader from any point in time. Like you could bring Jesse Livermore, you could bring your old boss, whoever you want, and why you bring them. So I'm going to keep talking while you think about this. And you got to, as a Canadian, I'll be pretty upset if there isn't a Canadian band in there.
All right. So, and is it albums that we're doing?
You can do albums or you can do bands. You pick.
Okay. So, yeah, I mean, for sure Radiohead and The Hip would be like my 2, that are
your go-to. Like, you're just showing your Gen X all over there. Like it's just And for those who don't know, he's talking about the Tragically Hip, a Canadian
Tragically Hip. And then the third one would probably be Phoebe Bridgers. I find her stuff is so good.
Like, I'm with you, big fan. So and like the album she did with Conor Oberst, I think was outstanding. Have you listened to that? Yeah.
She has a little crossover reference here, but she has a cover of Fake Plastic Trees that she did on BBC.
Yeah.
That is like absolutely like heart-wrenching. It's so good. If anyone wants to Google that. Well, and then what was the other thing? Oh, what
you have to give me a trader that you'd want. Any trader, any point in time.
So it would probably be my boss from Citibank.
Okay. Tell us why.
1995, 1998. So he was like an absolute psychopath, but he was like a heart of gold. Like he was like, people were super scared of him. But then one time, because I was in New York and I'm from Ottawa, and the flights were canceled. He's like, oh, just come to my house for Christmas. And like, I spent Christmas at his house. I'd been working for him for a year or whatever. So he's like a heart of gold, but like came across as a psychopath on the trading floor.
Yeah.
And he taught me a lot too. Taught me a lot about trading, a lot about like his mantra, basically. Like, I don't know if he ever said this out loud, was like, take the job seriously, but don't take yourself seriously. So he like was really hardcore about trading and took it serious, wanted to make money. But then, when you're at the bar, he's just joking about it and like, oh man, that was so stupid when I said that thing or whatever. So I felt like he kind of taught me like how to have fun and like take the job seriously, but still have fun.
All right. Okay. So before you go, tell people about your service, where they can find more, and your podcast that they can tune in on. Give us the whole spiel.
Okay, so I mean, the one thing you didn't mention, I guess, which is like the thing that I think is the best that I've produced, is Alpha Trader is my second book, and it's like about trading and risk management, everything about trading that I've learned basically in my life. So I feel like that's like my best thing. And then
it's called Alpha Trader, and it's a book. And I listen. I quote it all the time. You're in my trading wisdom, my daily trading wisdom.
I didn't mean to
no, honestly, like you are. Like I'm not. I forgot to list it. I didn't know you're still plugging it, but
no, that's cool. I mean,
it's timeless wisdom. So the reality is that you can, it's going to be just as relevant to 10 years from now as it is today.
Yeah, I think it's a good book. Like I feel proud of that book, and I got a lot of feedback, so I know it's decent. And then the other thing is, if people go to spectramarkets.com, SPECTRA markets.com, I write my daily, which comes from there, and everything like my free stuff is on there as well. So pretty much everything's on that website. So Alpha Trader and spectramarkets.com.
Actually, before I let you go, I forgot to ask you about your ingenious magazine cover system?
Oh man, do we have 2 minutes? I can
Yeah, let's
explain.
go. Let's do it.
Okay.
Let's tuck this in at the end here.
So one thing that used to drive me crazy was people would pull up these anecdotal things of like, oh look, there's a party in the Hamptons with all these tech guys. You know, you got to be short tech. Like all these anecdotal things. And I was like, is that really true, or is that just like cherry picking? So one of the famous ones is The Economist, and people would say like, oh, weak dollars on the cover of The Economist. You got to be long dollars.
Yeah.
So me and a guy at Citi actually got all the covers from 1997 to 2016 and back tested it. And actually, so specifically The Economist, not Barron's, because we did Barron's and a couple others, but specifically The Economist is like a really, really good reverse indicator.
Right.
And we did that study in 2016. So that's like all in sample. But then
Yeah.
since 2016, it's still been unbelievable out of sample for 10 more years. So I actually trade off of it. Like it's a meaningful 6-month signal for a lot of asset classes. So
And just to be clear, you're fading it. You're
yes,
going the other way. So
yes,
if it's like here's one you had recently, the True Danger post by Donald Trump. So you're long US from that?
right, yeah.
Yeah.
So
And sorry, go ahead.
no. So the logic essentially is that something like Barron's is a coincident indicator, right? They're just reporting on like what's going on in the market constantly and pretty much in real time. But in order for something market based to get on the front of The Economist, it
Yeah.
has to really been going on for ages, and they tend to be like the tippy top of the narrative cycle. So like they're crazy. Like one of them was Age of Chaos with like Trump going crazy like this,
Yeah.
and it was like sell VIX at 75 or whatever. You know, like they just tend to pick the extremes because that's, you know, they're by definition saying here's the most prevalent narrative in the market, like here's what's totally priced in,
Right.
and so fading it makes sense.
And you have this great spreadsheet and you show all like the P&L, you track it live. It's awesome. It's terrific. People should definitely go find it. And to your point, February 7th on the cover, the dangerous dollar.
Yeah, I know.
Tough to be short when that's
Makes it
happening.
so hard to be short dollars. Yeah.
And you know, someone asked me to ask you about the fact that the Japanese prime minister is on the cover of it. And I don't know if it's positive or negative, though, is the problem. Like sometimes it's a difficult decision for you to decide if it's actually, has a view.
So to make it as objective as possible, we had 3 criteria, which was, is there a market or asset class or country on the thing, which a lot of them it's not. Is there an unambiguous direction in the tone or whatever, the image? And then, you know, I can't remember what the third one was. It wasn't as important, but there was a third one. Like I guess it was maybe is it emotional or something like that. I can't remember. So we try to follow like these 3 steps and say, but in the end, there is still some objective element to it, because like if it says Age of Chaos, you know, do you buy S&Ps or do you sell VIX futures or do you sell VXS?
And like it says, it's Japan. It's like the world's most powerful woman. Does that really? Is that like it's probably not.
I wouldn't think so. No.
Okay,
if
so
it was more
there
like
you go,
Japan's
folks.
gonna eat the world or something. Then but yeah.
Okay. So go to Spectra Markets, check all this out, check out the magazine cover indicator, and go buy his book. Still for sale. It's still great.
Yeah, and actually maybe the reason I'm pumping it is I actually wrote a follow-up called Guess What? Alpha Trader 2.
There you go.
And that's going to come out in a few months. So
there you go. So, listen, when you get it out there, we'll come back and you can come on and tell us all about it. Come on the show.
I can pump it properly, like
for
a
sure.
Marketing genius.
Okay, well, thank you very much. Thanks, Brent.
All right.
Take care.
Okay, thanks.
All right, Patrick. Lots to talk about.
Oh my God.
Exciting markets.
Lots to talk about, right? Okay, so let's dive in. Okay, so the S&P 500 had a shitty day on Thursday, breaking back down. It's the same usual suspects, which is weakness in the tech space and continued sector rotation into the spaces such as consumer staples. Actually, let's start with the positives, right? Like that money rotation has caused a monstrous rip in the upside of consumer staple names. Like they were the dog shit of the entire space for a year. Nobody wanted to touch the Procter & Gamble's or Colgate's with a 10-foot pole. And suddenly when that sector rotation kicked in, people can't get enough of these names.
Yeah, what chart are we looking at there?
The XLP, which is the consumer staple
That's an index.
ETF. That's the ETF, right? That's insane,
crazy.
isn't it? Right.
For those that are just listening, it basically looks like a hockey. It looks like the Eiffel Tower went straight up.
Absolutely. And obviously the other benefactor was the energy space, the XLEs ripping. Yeah. Point is there are places money is going when it's leaving the tech space. And the theme that we had even for many episodes is obviously the idea that the Mag 7s may come under pressure and see distribution. When you look at that Mag 7 ETF, yesterday was a legitimate break to lower lows. Not only have we spent 2 weeks below the 50-day moving average, but whether some technicians will want to jam the geometric shape of a head and shoulders topping formation or whatever on there, but it has been a very heavy market for 4 or 5 months. And now we've legitimately started a sequence of lower highs and lower lows. So we're seeing legitimate pressure in that Mag 7 space that obviously was driven by huge distribution in the software space. We talked about this last episode, right back down to the lows. It's been an awful place. And the one part that bothers me about it is like everyone thinks the sector is doomed. It's like, is this due for a bounce just because of the sentiment and bearishness toward the space being so extreme? But it has been where the bloodbath has been happening. This in itself was going on actually for a month or two, right? Like this is not something new to you and me. We've been talking about this in previous shows. But what changed? What changed in the last few days and what is still in the favor of the bulls? Well, first of all, I'm going to start with what's favor. Like the SMH, which is the semiconductor ETF, actually went up to its previous 52-week high and is still holding up. And NVIDIA hasn't ruined the party, even though the earnings coming up in the next few weeks could certainly offer a catalyst for a pivot. But the semiconductors haven't broken. More importantly, where I feel like the real AI bubble was really taking full hold was in the Kospi, right? And looking at the South Korean index, and particularly it's grossly, not only is it making fresh new highs, but like when you look at the two components, look at the Samsung chart, breakout to fresh new highs. Look at SK Hynix holding up along its highs. We haven't seen the AI kind of thing where what's been driving the last leg break yet. So at least that's a positive for the bulls on that element. But what happened yesterday can't be ignored, and that was the breakdown in the financials. The XLF and the major money center banks took it massively on the chin. Not only did they report bad earnings back a few weeks ago that caused the first breakdown, but during this period where the market was trying to rally, they had nothing but a pathetic flagging formation form where that showed zero accumulation, zero bounce, failed at the 50-day moving average, and we just got this breakdown in the financials. So like if we kind of break it down, JP Morgan broke down to its multi-month lows. Bank of America broke down to its multi-month lows. And then you take a stock like Citi, put in a double top, legitimately broke its midpoint and is below the 50-day moving average on a 2-day slam. Point is, suddenly money center banks, which are your quintessential beta 1 asset, suddenly cracked.
Yeah. And, right? Actually, I was just looking through my chat in my group here. One of my subscribers, passerby, he was saying that it's not just U.S. and Canadian banks. It's actually UK and EU banks as well. It's across the board. So, right. So are they sniffing something out on a global basis that is scaring folks?
But you know what bugs me about making that conclusion, though, Kev, is that we haven't seen it yet emerge in widening of credit spreads on junk, which is where I thought it would have happened before we would see the money center banks.
But remember we talked about this in that the indexes, the junk indexes, are no longer the indexes of old. And the reason that they're no longer the indexes of old is because all of the stuff that was previously low-rated credit is now gotten sucked up by private credit. So the reality is that Right. So the reality is
So
that this index, the high yield, is in terms of the quality of it is the best it's been in a long time.
but you can see here, this is Blackstone, which is your kind of like private equity kind of names. This has been death, this chart. Like
Yeah,
this
and
is
like a lot of the BDCs
it's back
and
to Liberation
CLOs.
Day lows.
Yeah, and like
Right.
my buddy Paulo Macro's been, talking about this for a long time, and I got kind of shaken off my short because Harley Bassman started talking about how there's some good quality in there, and I was worried that they were pricing these things in with way too much of a discount. And then, I'm not blaming Harley; that's his opinion. And he might ultimately be correct, but I got shaken off, and I shouldn't have, because the reality is that these things are trading like death, and nobody knows what to value them at, and
No.
they just keep getting sold.
Right. Nonetheless, so this is the backdrop. By the way, and let's just quickly touch on a couple of things. First of all, up until today, the breadth of the market was okay. I mean, I wouldn't say that, it wasn't making higher highs or anything, but back at the start of the year, we were 70+%, which is healthy. And even during this Mag 7 weakness and stuff, it was holding in. And it wasn't until the breakdown yesterday that there's a little bit of a sign of little deterioration. But that sector rotation and breadth were sort of the story, as in the S&P equal weight, even up until yesterday, was actually making 52-week highs and looking like it was rock and rolling, which is money's coming out of the mags and being sprinkled everywhere else. That sector rotation is a story we've been talking about, and this chart was showing it. But this is the first kind of reversal day. That one day doesn't make a new trend. I don't want to call an end to this, but if we see the breadth of the market suddenly go down while the Mag 7s don't recover, that's when you have the serious deterioration in conditions, because that means sector rotation is no longer dominating, and maybe raising cash is. And we'll see whether that manifests, because one day I don't want to already claim that this is a new trend, but let's watch, because we saw that equal weight index doing really well. We saw the Russell 2000 doing very well, and they've started to at least show a little bit of heaviness on the short term.
Got it.
Any comment you want to make on that?
Well, no, and just back to this, I'm still thinking about that XLP chart you showed. And although I'm kind of shocked because I didn't realize how violent the move is, I've been kind of counseling that and talking about the fact that the Mag 7s are so large compared to the rest of the index. When money comes out of those and goes into other things like gold stocks, like XLPs or whatever, the moves are going to be manic. And I think that this is just another example of that, in that you shouldn't underestimate how much these other stocks can move once the rotation starts.
Another example, the analogy that I give my members is like, imagine you're in a speedboat going, and the Mag 7's not performing, is like throwing the anchor over the side of the boat and asking why it can't go full speed. Well, like in the end, the Mag 7s are that big of a weighting that how can the indice, even when the breadth is wider, how can the indice make new highs and progress higher when such a huge, kind of 1/3 of the S&P and 2/3 of the NASDAQ 100 are those 7 stocks? It's like it's so hard for the whole indice to move when these things are being sold.
I thought when you said the speedboat, I thought you were going to pull up that analogy of that famous, the 7 people in the speedboat, the bald dude driving. And
That's how it ends, buddy. That's how it ends. When correlation goes to 1 and a risk off, that's the boat bouncing event. But anyway, the one thing to highlight is, there's been numerous quants out there that generally have highlighted that the belief is that many of the CTA triggers lie around 6,800. Right. And so, overall, the systematic trading world, whether I think the last number I heard is like $500 billion in size. I don't know if I got that right. You can correct me if I didn't.
Nobody knows.
But
like the reality
It's something like that. But the point being that that a lot of people are estimating that a lot of these triggers for degrossing lie around 6,800. But whether you're a vol targeting fund with realized volatility starting to pick up, and or the CTA is just getting their quant or technical triggers to degross, we're on the edge of the cliff. We haven't really fallen off where that becomes a feedback mechanism and overwhelms the bid, but we're right there. And the question here is that are we going to see this market trip up a little bit at this point? What any thoughts?
Well, yeah, I've been writing about this and I've been worried about it. And I think that the reality is that
it's cute that you said that you've been writing about it like I would know. You think I'd read your
Okay. I know you don't read it. I know you don't read it, but you'd be proud of me because I've been arguing that you should be buying protection, which is very unusual for me. And I'm
proud of you then.
Yeah, you are. You should be proud of me. And not only that, I'm not cutting off the left tail. And I think that's something that people should really thinking about and be aware that.
Now you're crazy talk. That's crazy talk. What do you mean?
Well, because I think, I counseled this in terms of the precious metals trade for a long time. I kept saying, you might not want to cut off the right tail on the thing because of the skew, although the skew is attractive, that we might be surprised about the sort of move that we get on the upside. But I think that might be the same, scenario happening in stocks on the downside, meaning that usually skew doesn't pay. Usually you don't want to be betting on those overpriced, far out of the money puts being, worth it to buy. But I don't know, Patrick, there's a lot of things under the surface that are behaving very strangely. We're having all sorts of problems out there. Finally, as you highlight, we have the leading stocks rolling over. And I wrote about the fact that, the reality is that at times this is the final gasp that you see a situation where they reach for other things and then the whole thing rolls over together. Lots of danger out there.
So can I tell you what bugs me?
What's that?
What bugs me is that rarely does lightning strike twice in the same spot or in the same way. The market rarely ever drops the same way twice. And what is really crazy is that this market is literally to the calendar date and from duration playing this out identical to the pre-liberation day period, which is it's like it started topping out in October, November, started getting heavy, not be able to beat new highs all the way through, and middle of February it breaks down and begins to drop, and it's like literally following the analog to the T. And is it this easy, Kev? Like, can literally we see lightning strike twice where it's going to literally do the exact same playbook the same way? And this is what bugs me. It doesn't feel like it's possible.
Well, maybe it'll be worse. Maybe it won't bounce. But in terms of why that might occur, I think that you have to put a big weight on the fact that there's new seasonality with the issuance of these auto callables and the option markets. I really truly believe that the issuance of those things is so important and is moving the markets more than people appreciate. So
anyway, I just thought it was really weird
a new seasonality that is occurring.
Yeah. Anyway, I just want to highlight that the analog looks the same. It's insane. Like that literally it's following the textbook, like in total duration, the topping, the timing, everything seems to be just following tick by tick, the same thing. And it just seems too easy. I hate when something looks so obvious.
Well, the only thing I will say about this, Patrick, is that you're I did notice that. And I haven't, spoken about it publicly, but I did notice it. You're the first person I've heard that's actually talked about that publicly. It's not. And one of the things that worries me most is when those sorts of analogs get fully priced in. It's what everyone's talking about, when everyone's passing around the charts. Everyone is positioned for that. And so far,
but this is why our Market Huddle listeners listen to the show.
That's right. All this alpha.
They get this alpha. This is. Anyway, but
It's such a douchey thing to say. Next thing we know, you're gonna make a thumbnail video with you with big bright eyes, on YouTube. Check in for this amount of alpha. Okay, keep talking.
Anyway, so what I wanted to move on with briefly, let's just quickly talk about the economic news this week. The key thing here, retail sales came in weak. We got the delayed non-farm employment, which came in strong, but this is the most sketchy time of the year because the seasonality always has that huge drop in the post Christmas period, and they seasonally adjust it. And the question is what is the real number supposed to be? Like it's always the hardest one because it's of the adjustment, but it came in stronger. The market kind of brushed it off, and then we get a soft inflation number. First of all, what's your sizing up of the data this week? And then I want to talk about what are some of the impacts that happened from it.
Okay, so
anything you want to comment on them?
Unemployment, it's a random number generator. There's lots of different variables. I don't think that's mattered. On inflation, you're going to be surprised to hear me say this, but I think that it's tending towards lowering. Inflation's it is tending towards coming in lower than expectations. So I'm actually I was saying earlier, I'll take the under today. When we were, laughing about what happens with the CPI prints. And one of the things that I've noticed is there's this CPI, this trueflation chart. Yeah. And, if anyone wants to see it, just hit me up, send me an email and I'll send it to you. I'm
hitting you up right now. Send it to me.
Okay, I will send it to you. But this trueflation, which I stumbled upon, and I think, some guys are talking about Mike Green might have been doing it. And I made a chart of it going back. It seems to lead. It looks like it's a great indicator, and it's showing, inflation at 0.5. And a lot of smart guys that follow inflation keep telling me, you know what? The reality is we're headed lower. So what if instead of the inflation that everyone's expecting and is priced in, what if we get an actual deflationary wave? Like, what if this is the start?
Buddy,
what if the finances? Yeah, what if the financials are actually noticing that the economy is not as strong as everyone expects, and that we might be rolling over from a kind of in a deflationary way, right?
Yeah. I don't. Let's not use the scary word deflation. I would say disinflationary.
Okay, disinflation.
Like in the end, that inflation is not a problem right now, and it's not. And there's no reason actually to believe inflation is imminently going to be a problem.
Well, I guess I'm going to push back a little bit on that because I think it's complicated because some of the commodities are starting to go. So on the one hand, I understand
the only one that matters is oil, Kev.
Yeah, but oil's doing well. Oil's doing well.
Come on, that is not inflationary when we're just coming off of multi-year lows on oil.
No, but if we're talking about at the margin,
daily chart.
But if we're talking at the margin and we're talking about versus expectations, then it's headed the wrong way. Anyways, we'll see. I think it's complicated. It's a scary situation right now. I continue to say that people are underestimating the intra-asset volatility that's occurring, the moves that are occurring. We have even talked about the fact that a lot of the quants are getting absolutely destroyed. In terms of the factor movements and what's happening within the markets. People seem to be positioned for the wrong sort of rallies. Like, as you say, the reason that XLPs, look like they're on a stick is because nobody owns them. And these are the kind of environments that where accidents happen. That's how I look at it. And not only that, like IGVs, like Patrick, like those things are down 30% and they're not bouncing. And this was something that everyone owned, and software was going to eat the world. And this is what everybody, it's not like you go pull up this. Let's do it together. Let's pull up what's in here, because it's not like there's some crazy, crappy stocks in Microsoft, Oracle, Palantir, Salesforce, Palo Alto Networks, Adobe, Intuit, CrowdStrike, AppLovin, ServiceNow. Like a lot of these things are the old kind of leaders that everyone was touting, and that everyone's accounts are stuffed full of, and they've just gotten absolutely crushed. And so I look at that, I'm scared. And and Patrick, you talked about the semis, and you talked about how they rallied, and they're still looking good.
Yeah.
To me, I think what's happened here is that a lot of these pod shop type places that need to be invested were long the softwares and thinking that the semis were expensive, or or just long onlys were long the softwares thinking that semis were expensive. And what's happened is, as the softwares have gotten crushed, they're like, well, we better go back and buy something. And they're like, I'm just going to go back into semis. And one of the things that worries me is that when that cycle turns, when we see semis like earnings start to roll over, and the market realizes that semis are still cyclicals, like the market is going to get absolutely annihilated, right? Like it's gone through. And like, if you think about it, we went through, we destroyed Bitcoin, the market took it. We destroyed software, market took it so far. What happens when they finally go for like the NVIDIA and like the final one? Like I'm worried about it.
By the way, since you're on, you mentioned Bitcoin. Is this time around when Michael Saylor zeroed? Is this the?
I don't think I think he's actually smarter than that. He's not going to get zeroed, because the reality is that I don't believe that his debt is due for a while. So, but one of the things I will say about this is that I suspect there will reach a time when Mr. instead of trading at a premium to NAV, trades at a discount to NAV, and there will be all sorts of wise guy hedge funds that are buying it, trying to pressure Saylor to sell Bitcoin and buy back stock. So that's where we're headed on that. But you know what, Patrick? I haven't put in the 1,000 hours, and I'm not part of the 0.01% of Wall Street that can truly understand this. So you have to take what I say with a grain of salt.
All right, there's the grain of salt has been taken. All right, so so I want to talk about one of the big things that happened off of the economic news, and I've been trading it, and so far it's working, but particularly on the jobs numbers, when I saw the fade, we saw the turn on SOFR futures in the post jobs number period. This is the December 2026.
I love this. We've turned you into a stir trader.
Stir trader, mother, dude.
I used to talk about these things, and you'd be like, your eyes would gloss over. Now you're just like a junkie sitting around.
I'm a junkie. Yeah. I'm a junkie, but like, okay, but so let's put it into context though. Okay. So the jobs numbers, whether they're hot or not, but look, retail sales came in soft, inflation's coming in soft, and it was a seasonal adjustment on the jobs. Yeah. Overall, what you can see here by the stir traders is the vote of confidence is a dovish pivot, right? Like they're basically starting to price in potentially another rate cut this year. And I'm wondering whether this becomes a bigger trend, particularly in any point. If the stock market breaks, there is no bigger disinflationary pressure than asset prices going down that impacts everything. And the stir traders at some point are going to price in a far more dovish Fed in here. Is this a turn point in the SOFR futures? Is a puzzle to solve. I don't want to make it like I know, but it is the first interesting time. Like, we literally have gone through 3 months of watching paint dry. It was an awful, boring period over the holidays into January in the rates markets, and it's woken up. The other place where we've seen that beyond that is the bonds, and we saw a huge breakout in the 30-year, and I say it's huge, but look, the what we have seen in the bond markets. This is the weekly chart, and this is the looking at the ZBs. We have seen one big sideways consolidation. No matter whether you're bullish or bearish on the long term, it's been boring as fuck. It's been a sideways dead market. The implied volatilities on bonds have gone down to single digits at one point. Like the move index, vol, all of it's been collapsing, and it's moving up. And
Well,
the
first
question
of all,
I
in
have,
terms of the vol going down, I think that that's actually a desired outcome from the administration. They want vol to go down. They are trying to smooth that.
Bottom line, bottom line is the stock markets have weakened. And while we saw in 2022, and you've talked about over those scenarios where stocks, bonds, and the dollar all going down together, all that shit. But for now, from a net traditional intermarket perspective, stocks down, bonds up is at least from a traditional intermarket perspective manifesting here.
Yeah,
And
I
so
would
the
agree
question
with
is-
that, but I don't think the dollar has resumed their typical relationship.
No,
but I
it has
agree
not.
with you that the traditional negative relationship between stocks and bonds has started to reassert itself. I will.
So the question is this a new trend? Look, this has been a positive 3, 4, 5 days. And I never love to draw new conclusions in such a short window of time. But nobody gave a shit about bonds. I could not find a single person talking about it. And that's when I love it. It's like setting up in a clean way and nobody gives a shit. And this is, well, now clearly this is an alpha show. And now we're giving away the secret sauce. But the point
sauce.
here,
Yeah.
the point here is it's moving.
I agree with
your
you.
take?
I agree with you. I think that they're starting to trade better. I still don't think the long end's the way to play it, and I actually like your silver call better. And like that's
a
much
better leeway up to play.
Yeah,
For sure.
but that's the better call, because ultimately I do think they'll panic, and that'll steepen the curve, because they'll go and they'll cut rates way higher, way more than both folks expect. And they're starting to trade that way.
It doesn't even matter what the cuts will be. It's about the fact that the stir traders are going to start pricing in way more dovish Fed, and that move's going to happen fast.
I was just laughing though. Can I just 1 second? I just want to say, when you were complaining about nothing happening, and then I was like, welcome to the stir world. Nothing happens, and then complete utter madness for like, a month or two, and then nothing happens. Right?
Yeah.
It's the way that these things work. Once we get the actual turning point, like once they start turning back on the cuts, it's going to get exciting. And if they're turning on the cuts because stocks are going down, then watch out. If that is the case, and they're turning, and that's one of the things that I think we go back to. A lot of people were excited when they were cutting rates, and there was some really smart people out there that always be like, "Hey, be careful what you ask for," and Suzanne Saunders from Schwab is one of my favorite strategists out there, and she would argue this all the time. The stock market is strong because they don't have to cut rates, and if they have to cut rates, then that's actually a problem. And I think we should just remember that when we start getting excited about, if all of a sudden we see the front end starting rally, like in terms of we see those silver futures really take off, it's going to be because there's a problem in the economy. And that is like the most bullish scenario at the front end is actually negative for risk assets.
Right. Well, listen, it's spicy out there, buddy. Things are interesting. So I want to move on, and let's talk about the dollar, the most important thing to watch, right?
Yeah,
now, I actually think it's really interesting where the dollar index stalled. Now, I think the only currency that is kind of bucking the trend and doing its own thing is the yen, and rightfully so. That's being driven by yen monetary policy, the Japanese monetary policy and other things. But the dollar and a lot of the other cross currencies outside the yen are very much following suit. Now, overall, just looking at this chart, it looks bearish. There's no, I cannot look at this chart and tell you something looks bullish about this chart. Lower highs, lower lows, breaking key support lines, rallies failing at the moving averages and the Fibonacci zones. Overall, it hasn't even upticked in the last few days. So as of this moment, there is nothing that could be said bullish, technically, just on this chart.
Okay.
But But there are some
You're gonna
interesting
find,
things.
you're gonna find something.
No. I am not finding something. I actually am looking at the dollar here purely from a neutral perspective for a moment. Now, the low that came in on the jobs numbers around 96.50 happened to be exactly at the 61.8 retracement, like Fibonacci's work, right? It's a bit, it came right in there, and that becomes a phenomenal line in the sand, because if the dollar index breaks below 96.50, then it's fallen off the cliff again, and there's another leg going down to 94 probably on the dollar index, but it's got to trip up this support line. At the same time, the previous high, which came in at the 50-day moving average, which is right where it is, would be the failure point of a dollar, where a dollar bull reversal would become technically very evident. And so the way both of us as Canadians, the way we want to do is look at this from a hockey perspective, which is that consider this area to be the neutral zone on the rink.
Yeah, be careful of the neutral zone trap, though. Be careful of the neutral zone trap.
Neutral zone trap is a tough one. But the way I would put it is that you don't want to in any way conclude that the Bulls are playing offense unless we're clearing the upside zone here. And the Bears are playing offense if it breaks below. And the way I look at it is take at this moment at least a neutral enough stance where you can pivot, where which way it goes, you want to be able to have acknowledged. Because if we do go into a risk off cycle, yes, I understand money being repatriated out of the Mag 7s and out of the US dollar internationally could drive the US dollar lower. I don't hate that thesis, but I want to see it technically confirmed. And and to me, that's a breakdown below that this 96.50 level to saying that the dollar has resumed a new leg down. And if we go into a risk off cycle where suddenly dollar plays safe haven, even if you don't like the thesis, it would happen above 98. And at that moment, there's just no denying that something is underway. And so I'm taking a very neutral stance on the dollar here. I don't have any strong conviction at the moment. And I'm going to let the technicals do the talking in this situation, because I don't think my opinion is strong enough to take it off of that. And so I'm going to let the technicals talk.
A true technical analyst. He's going to buy it if it goes up, and he's going to sell it if it goes down. I'm just giving you a hard time. Okay, let's go. Keep going, buddy.
Anyway, so the point though is that I think but I do want to talk about the yen for a moment.
Okay.
And I'm going to do the yen US dollar rather than the traditional US dollar yen pairing.
Okay.
Because I want to look at it from a yen bullish perspective. It's easier when you see it as a bottoming formation. Yeah. I'm going to put on a weekly chart. And obviously, the yen is at a 2-year low, been bouncing off a key support. The intervention came pretty much exactly at the levels where the interventions have come before. And what degree of an intervention this was, you can also give your 2 cents on. But it is off of a major low, supporting here. And there could be a carry trade unwind. Now, I don't think it would have the same drama as it did back a few years ago, but will this become a flows thing? Will a capital flows element come into play here and the yen rally? I think this is a super interesting thing to watch. The fact that the yen reversed the way it did off of this retest of its low makes this an interesting case that we just witnessed a 4-month bottoming formation on the yen. And this is probably the most interesting currency pair of them all at this point. And the fact that you abandoned it a few months ago.
No, I didn't. No, I didn't.
Well, I have the previous episodes. You were saying I had to admit I was wrong.
I said I was wrong, but that doesn't mean I gave up on it.
You're a hodler. You're a hodler. You're going to be able to spend all this yen the next time you're in Japan.
I was just saying that I just chose the wrong one. I was just admitting that I was completely and utterly chose the wrong currency to be bearish on, or to be bullish on and bearish on the US dollar. The one thing I will do is I will plead the fifth for fear of Gucci my trade by saying anything that remotely.
Okay, so nothing else to be said then. All right, let's move on. Everyone knows. It's all right. No, anyway, listen. Is there anything you that I forgot to talk? Well, let's talk gold and silver. Jesus, holy cow!
Okay.
My God, can you believe it? Actually, our last episode was literally
the day before the big, like the big smash.
How could we not talk about it? I can't believe we nearly ended. Like, what charts did I forget? Oh, obvious. but yeah, like we recorded it right up along the top. The one thing that, and you've heard me talk about it, and I know you fundamentally agree, you give your own perspectives on it. But the one thing that I always highlight is when there's parabolic acceleration to the upside of any asset, the one thing that becomes much more predictable is time versus price. Like price, you don't know how high something in a parabolic phase can really go. It could have been 6,000. It could have been even 7,000 on the upside of gold in the final parabolic blow-off phases. But when things accelerate hockey stick, the one thing that is far more predictable is that it usually will end within a very small window of time, as in like a few weeks. And that was something that was a part of my thesis. And I'm trying to remember if I shared that with you back then.
No, you did. I think you called it well. I think you were saying like, yeah.
But what is the interesting things I want to highlight on gold? Well, again, like if you take the low to high, sorry, let me just do it this way. We had basically a fib retracement drop in gold, which was more or less a 50% retracement of last year's rally, right? And so the bounce has come to a very typical retracement zone. So overall, what I would generally say here is that after a blow off top, it is usually quite traditional for an asset to consolidate and absorb the previous 6 months of price movement and end up actually trading far more range bound, far more boring, and far tighter ranges. I think that gold in the past, after its first corrective low, did not make lower lows. Be interesting to see whether gold does that this time around, where 4,500 now becomes the low end of this trade range. And while gold may trade back to 46 or 4,700, 5,200 very likely could be a ceiling. And we're going to probably spend the entire first quarter just chewed up in a bouncing trading price action on gold as it absorbs that previous parabolic move is my starting base case. Do you want to push back on that?
No, I'm with you. I'm hoping that we get rid of the speculative fever and we go back to the real reason for the bull market, which is the central bank's buying. And I don't think that the central bank buying was what sent gold up there. In fact, I suspect that if I was Bank of China, I definitely wouldn't have bought any, and I might even have sold some as it turned to try to break it. Because, again, to me, the most important thing that China's doing, they want to buy as much gold as they can over the next 5, 10, 15 years. They're not interested in the thing rocketing up right away, because the reality is they're trying to buy volume. And that's who you're trading against. And so to me, it's just a matter of now shaking out these speculators and we get back to them being there to buy it again. I don't know what that number is, but I do suspect there will be a sentiment point where people get fed up with it and get bored with it and go on to the next thing. And at that point, when everyone's saying, it doesn't work, it's the end of the
next bull market.
That's when you start buying it, because that's where Bank of China will be standing in there and just saying, and waving it in.
Generally, there's a debasement drift, which is essentially fiat money loses value. Gold naturally over the long term rises. And at the same time, central bank buying is a positive tailwind for that. So gold will structurally be rising over time. This is a fact. But the thing is
It's
when
a fact,
gold,
is it like the Bitcoin yield? It's just a fact. It has to occur.
it's a fact. It's a fact. This is like
I heard there's a Bitcoin yield too.
Okay. So point though is that when gold goes and literally rallies 50% in a year, there's a point where this is no longer trading based upon that logical stream, but rather speculative money is coming in, and the speculative money now is being squeezed out. That's what it really was. A conclusion I want to get to. And but what's interesting is the implied vol of gold. The last go around in October only had a 30% implied. It hit 30% implied, but this time around there was a crash to the upside as the gold implieds went to almost 50% on the upside. But it already trimmed 20% off of that high. So like we see vol normalization finally coming back in on there. But the crazy one had to have been silver. Like, let's quickly do this and talk about them as an aggregate. Silver obviously goes and does a double in a span of like a few months, and crashes in one of the most spectacular, like a peak to trough within a span of days. The thing dropped 48% off of its high. It's a halving in literally a few days. But what was insane was gold implieds went to 120%.
Silver implieds.
Silver implieds went to 120%. Kev, I'm going to make a confession here.
Yeah.
You know what I did on the SLV?
You didn't sell vol, did you? I'm so proud of you if you did.
But this is insane.
Yeah.
The $210 strike calls.
Yeah.
We're paying $5 out of 70 vol.
I looked at it. I did something similar too. I sold the 180s. I can't remember what they were, and I bought the 80s. I think it was something like that. I bought the 80s. The skew was just obscene.
Tell me you ratioed it. Did you ratio it?
No, but I wasn't long gold silver, so I was just straight outright short. I was buying a put and selling a call. So listen, I did it. The only reason it worked is because I only did just little shits and giggles size.
I leaned into this, but I did it as a ratio call spread. And so I bought a very small amount of at the monies against a very large naked position up above to kind of give a hedge, and it worked. But the fact that they were paying, is your
underwear getting worn because of all the extra weight that you're carrying in there?
Wanker. All right. So, but the point being that it's insane that we saw that kind of thing, and look how it's normalizing. We went from 120 already back to 70. I don't think that the consolidation is over until we're back to the trade ranges of implieds where we were before, where everyone's just going to get bored of it. Things are going to grind. It's not going to get the same speculative attention. Things are going to normalize. I think the next major buying opportunity in gold and silver is when no one gives a shit. And that's going to be when everything reverts on all this.
Yeah, I'm with you, buddy.
All right. But other than that, crude oil, now, yesterday was a bit of a dip, but overall, it's staying above its 50-day moving average. And we have seen the pattern of all dips being bought. To me, the line in the sand for it to stay bullish is the 60 handle. Long as all dips are contained into the 60s and bought on dip along the way, then I think that you have to be still fishing to see whether or not upside vol is there. What was crazy was the skew. There was a huge right tail skew being built into the crude options. And obviously, oil volatility was also quite elevated. What I don't know how to size it up, but oil didn't have a move like gold and silver did. But
maybe
we got up to
maybe it's still coming. Don't fade the skew, man. Don't fade the skew. It's my new line. Don't fade the skew.
But Vol did go from 55% down to 42%
Yeah.
in the
It's
thing.
not over yet.
Like
this is like, we're still, I think, well, the reality is that this is the Iranian premium, right? Like for a little while there, everyone thought it was going to happen on the weekend. Like I kept hearing, it's this weekend. Even recently, I heard some guy that supposedly is a smart guy saying, "Oh, Netanyahu just came back from the White House. They're gonna do it tonight." They said, like they were gonna do it last night or Wednesday night or whatever it was, which we all know is bullshit. You only have wars on the weekend when the market's closed. Everybody knows that.
Well, let's be realistic. They do that. There is historical precedent for this.
Well, I wouldn't use historical. There's recent precedent for this.
Recent precedent for it to happen that way. All right, so
most presidents don't worry about the stock market when they're doing geopolitical things. It's kind of unusual to pick optimally from a battle point of view, it would be great if we went on this Tuesday. But no. Let's wait until Friday when the Globex is closed.
All right, let's talk about the Widowmaker.
Oh, Nat Gas, our friend.
I am shocked that we didn't get an optionsellers.com event announced by somebody during this.
We did get something. Let me just click on this. So they were sharing this in my chat. Today's edition of Hedge Fund Speak. Bluecrest Capital Management's senior natural gas trader Alex Watson and several analysts have left the firm as extreme price moves in markets have dented profitability. People familiar with the market said, like that Winnie the Pooh thing where it's like there's like two ones, one in a tux and one is just regular Winnie the Pooh, and they put blue up and then they put that's the regular Winnie the Pooh. And then the one in the tux is extreme price moves in markets have dented profitability. So when you have a bad trade, Patrick, that's the new line. Extreme price moves in markets have dented profitability.
Dented. It's just a dent.
Just a dent.
Tiny little dent. But everyone's fired.
Yeah. So there were some casualties. We shouldn't be laughing.
But what was crazy was that literally the squeeze was only on the front month contract. What was crazy was that the fact that when you looked at it, it was the February contract that made the entire move, and the March contract barely budged.
I know, and the real pisser about that is that stupid Boyle and whatever the other opposite one of Boyle is.
Weren't in Febs.
They weren't in Febs. They're in the more liquid ones, and so they weren't trading Febs. They were trading, and sometimes they are in the front ones. So there would have been even spicier, Patrick. If this had Boyle owned Febs, then owned Febs, and then what's the other side of Boyle? What's the downside one?
Well, I don't know.
Whatever, because you have to look at them as a whole because they're both negative gamma. So whatever existed, but they might have zeroed it because how much did it go up and down? On a daily basis, what was the biggest daily move? Was there a 50%?
Probably this gap where it was up 41%.
So it wouldn't have zeroed it. It would have just been an 80% down day for the oil or the opposite of Boyle. But it would have then gone even further because they would have had to hedge more and more. So it would have been spicier. So listen, Nat Gas traders, next time you're doing this, let's do it in the one that Boyle and the other guys own.
But it literally does not disappoint. Widowmaker, why not have a strategy on just owning the tails of Nat Gas? Because
I think they're priced. But it's priced for that. Go look at the tails. It's not like the market hasn't figured that out. I think if anything, the tails will be
naked. These tails.
Yeah, I think if anything, the tails are overpriced over time because the reality is that if they weren't, then people would do what you say.
Yeah.
So, anyways, I listen. It's a spicy move. One of these days, though, Patrick, can you imagine if it doesn't come back? Like we get a real move in that gas.
Yeah.
Right. It's been a long time since. What are we looking at there?
This is wheat. I wanted to talk about it next.
Okay.
Let's move on.
Let's talk some wheat.
What I was going to say, like we had the Russia-Ukraine war create the top and then the Eiffel Tower formation form perfectly on grain prices. And so we have this huge period where basically not only was it a vicious bear market in 2022-23 in wheat, but it's been dead. It's been dead. Nobody gives a shit about grains anymore because there's zero pulse in this. And they've been left for dead. Is this year the year of the grains? We got a really interesting wheat turn up here in the last week, and it's just coming to some previous overhead resistance. The ag stocks have already been working great. Stocks like Deere are rocking and rolling on the upside. I'm starting to be curious. I love it when nobody talks about this shit, and you're seeing this kind of price action. Anyway, I'm just curious whether or not this is when we start seeing the grains work.
You know, Patrick, I don't know what's happened to you. You're trading stir. Now you're trading like wheat and corn and stuff. Like you're turning into me. This is bad news for you, buddy. One of the things I'm just gonna say about the grain, about the ags in general, that scares me now. I don't know how to deal with this, but the reality is that with Trump and all the tariffs, it ends up being that you could have a situation where U.S. wheat is like in the dumps because nobody's buying it because of tariff issues and things like that, and European wheat is flying. And so one of the things I just want everyone to think about is that wheat isn't wheat anymore. And with the end of globalization and the reverse, sorry, not the end, the reverse of globalization and the increasing tariffs that we're seeing, you need to be aware and trade different markets. Like, remember how we saw copper trade?
The solution is that Americans need to eat more baguettes. Like there has to be internal consumption.
Internal consumption. Well, the reality though is America is a global ag exporter. So as the world tries to, fight back, you could see a situation where tariffs are put on that, and therefore it ends up being that the farmers pay the price. And the reality is that U.S. wheat and soybeans and things that we trade don't go up, and the rest of the world is going up. So that's my only kind of thing is, when you're trading technicals, you're not like thinking about actual fundamentals anyways, but just be I don't want to confuse the kind of message with some fundamentals.
I'll call bullshit on your thing though, fundamentally, which is that, the tariffs are geopolitical and political jostling. But if there became any reasonable gap between prices of wheat in Europe and America, very quickly there would become political pressure in Europe to lighten up on the tariffs so that they can take advantage of bringing prices down in Europe. It would be short-lived. There is no way that they would allow politics to get in the way of them like taking advantage of a gap like that. It would be short-lived.
I'll take the other side of that, Patrick. Patrick thinks that government officials are going to do the right thing. I'll say that.
Not the right thing. It's political suicide.
I don't think most people would realize. And like when you think about it, wheat, like the actual wheat that goes into your bread, it's not as much as you think. That's not the major component of it. No, in terms of the price, in terms of how much the component, so wheat doubles in Europe or whatever. I don't know. Even that would be a lot, but let's just imagine it goes up 30%. It's not going to make a big difference. At 30%, it goes up in Europe, and then US, it goes down 20%. Us trading levered long futures, it means everything. But for the average person, it means very little.
All right, but I'm done. All right. I have nothing else to say because you're getting a little
philosophical.
Anyway, let's
philosophical or fundamental. That's the problem. Getting a little fundamental. Yeah. Okay. All right, folks. Thank you very much for tuning in. It's always a pleasure to have you on. Bull market, bear market. We're just happy you spent some time. Now stick around for. Oh, wait, actually, before I do that, Patrick, where can they find you? And more importantly, that great YouTube show that you have with the thumbnails that are just out of this world. Although I have noticed that there's no fire in behind you recently. I'm going to have to talk to Danny. There needs to be more fire behind you.
Listen, Danny has been hired to get me more views. He's doing what works. It's just the nature of the thing. You can come and check out the amazing thumbnails at Patrick_Ceresna. It's just worth it. Just the thumbnails alone. Exactly. Forget the alpha in the actual videos. It's literally the thumbnails that make the difference.
You want to subscribe just so that you can see on your feed, it pops up and you see like, oh, there's just a high quality thumbnail. The world is ending, and now I don't even need to click it because I know the world's ending, and that this is the biggest thing that's ever happened in the markets just happened this weekend. So therefore, I don't need to worry.
Well, listen, the one thing I can say though, if you can get past the puke point of the thumbnail, the analysis tends to be very similar to our conversations. Okay. So you just have to get past the gag reflex of the actual image. And if you can do that and click on it, there's some actual great content.
Some people say that that's really the true alpha is actually all in Patrick's channel, and he doesn't share any in here. Okay.
Where can they find you, buddy?
You can go to themacrotourist.com and listen, bear market, bull market. We're just happy to spend some time together on this crazy ride. Now stick around for the after show. All right. Danny is going to be audio only today.
Shocking. He
doesn't want to show his face after those thumbnails.
That's right. He's embarrassed.
Absolutely shocking.
Shocking what? That I'm ragging on your thumbnails?
Exactly, yeah. I'm making Patrick millions here. Here you are, coming in here, putting me down. That's not like you, Kev.
I just had a mean streak today. I'm just feeling saucy.
Yeah.
Yeah.
I can tell.
Yeah. Okay, Patrick, what about this beer? We got to get that done. It actually looked good. It's gone.
Empty.
Okay,
it's gone.
You give us a rating.
It was good. It was actually a very good. You know what? It's very much just like obviously Paraguay is a very hot country in terms of temperature. So it's just like your traditional kind of Caribbean beers. It's like it drinks like a clean summer refreshing drink, like a Banks beer or one of these other kind of Caribbean ones. Nice, clean, solid. For the type of beer it is. I'm going to give it a 7.6.
7.6. All right. What's the temperature there, buddy?
37 degrees.
Come on. Is it really?
Yeah. Yeah.
And for those our American friends that are going, that doesn't sound very warm. He's telling us it's in Celsius.
In Celsius.
So what's that, like 110? What is 37?
Yeah, it's hot.
37.
It's hot.
Degrees.
Luckily,
it's 98. It's only 98.
Yeah, but it's like the air conditioner's going. It's like I'm doing a lot of work, so it's not like I'm being tortured outside.
That's why the shirt is popped. I knew it. That's why the shirt.
The shirt is popped. No, you know what it is. The shirt is popped because he saw Rick Reeder. You probably don't know this, but Rick Reeder is this BlackRock guy, and he goes on CNBC always, and like it's always depending on how well the bond market's doing. It's like 2 or 3 buttons undone. So
absolutely.
Well, it could also be the fact I may add fire to the thumbnail today after this recording. So
I think you have to.
Yeah. He's got.
I think you have to add fire.
Yeah.
Well, I'm surprised that you don't add fire each time.
Well, because you can't overuse it, Kev.
Oh, okay.
You got to change it up.
You got to change it up.
You just don't know these things, man.
I'm not very good at the thumbnail jokes for sure.
Kev, so you were skiing up in Whistler.
I was. It actually did not rain top to bottom for once, so I have to take back everything I said. Well, not really, because it proceeded to rain almost all the other days. I did learn something. I was thank you very much for Mike Campbell for having me at this wonderful conference. Our friend Victor Adair was there. Tony Greer was there. It was just a terrific time. But I did go a day or two early, Patrick, talk to some of my subscribers and clients. And I think I've learned the trick about Vancouver is that they find out when the Easterners are coming and they schedule all the rain for the official times that they're going to be there. And when I snuck in and had just one extra day, I got there and it was the most beautiful day. I left Toronto, it was minus 25 with like 2 feet of snow. And I got there and it was 9 degrees, sun shining. I was like, this is no wonder everyone moves up there. And then it started raining. And I was like, okay, send me back to the cold.
Yeah. Oh, you know what? But it's like ridiculously cold out in Ontario, isn't it? Like you guys, all that snow.
Yeah, there's a lot of snow. It's strange. Like they're sending like dump trucks to the streets, Patrick, and like so they had so much that they needed to pull it away. You know how there's that big mound of snow out by the Allen Road or whatever it is? It's the highest it's ever been. And one of the things is we have this joke because, so for those who don't know, they take all the snow from the streets and they pile it up in this old airfield that's kind of mid Toronto or a little slightly north. And you can drive by it on the highway, and there's always a dispute about, or not dispute, there's always talk about how long till it melts. And you would think that this thing would be like, done right, May, you get a hot day or whatever. And it goes well into the year. And so there's talk like that we might actually have the kind of the glacier event on our snowpack, because it might make it through the entire year into the next year. That's how much snow we have this year.
That's insane.
Yeah, it would be funny. We're going to have to do it. We're going to have to get a pool going.
I'm not going back.
I know you're sitting there and you're 37 degrees and you're just like, you're not going back. But you are coming back, and we're going to see each other. It will be
absolutely nice. But last week while you were freezing your ass off, I was down in Mexico City. It was pretty sick.
Oh, I've never been. Is it nice?
Oh, it's honestly one of my favorite North American cities.
Really?
Absolutely. And I've been. That was my fourth time being there in the last few years, but this time around was awesome. I was down there with my inner circle, and we were trading. But we went on a little trip, and we basically went to the Temple of the Sun, and we went on a balloon ride. Basically to check out the temple. It's this temple right over here. That's the big one that they have there in Mexico City, and it was just an absolutely once in a lifetime opportunity. It was so awesome. I highly recommend it.
For those that are listening, Patrick has posted this picture that one of his members has taken, and it looks like it should be out of National Geographic. Like literally, you should be submitting that for the consideration for the picture of the year. And sorry, go ahead.
Epic.
Well, you are just such an international man.
One of the members that actually took the picture. My camera skills are nowhere near enough to be able to capture something like that. And he scored the money shot.
Do you want to tell? Can you say his name or no?
George.
Oh, George.
No, it was
good old George.
I'm not going to say that one.
No.
But George nailed it. Like just an amazing picture. But it was so awesome in person. Like just we went up into the air at 6 a.m. so that way we'd be there for the sunrise. And it's honestly highly recommend it. If anyone is heading to Mexico City, hammer the balloon ride in on the thing. It's totally worth it.
You know what you you feel like when you're saying that, all it can remind me is that, that song "You're So Vain." 1 second, and not that you're vain, but it's like so if we pull up the lyrics, it's like, what was it? He drove, or is it something about Learjet? Oh yeah, then you flew your Learjet up to Nova Scotia to see the total eclipse of the sun. That's kind of feels like you. You're just like going around the world doing crazy stuff. By the way, do you know who You're So Vain's about?
No.
You probably won't know. Danny, do you know? Danny won't even know the song. Danny, do you know the song?
Sing it.
No. You're always good one.
So you don't know it. But anyway,
so the song, she's never admitted it, but it's pretty well known that it's Warren Beatty. So when you hear that song next, it's about Warren Beatty. He was a famous Playboy philanderer.
There you go.
Anyways, okay.
All right, let's wrap.
All right, folks. Thank you very much for tuning in. We'll see you next week. Stay safe. Trade smaller. It's scary out there.
Cheers, everyone.
All right.